Paytm was reeling under pressure today, and on the back of the delay from NPCI on UPI market share cap. Not just that, the stock actually plunged 54% from its IPO levels. And now the big question is whether that presents an opportunity for more growth, or is there going to be more trouble for the stock going forward? Let's go across to my colleague Sharad, who's getting us more details on that. Sharad.
Well, yes, Paytm in the day's trade also seeing the stock is trading lower, and of course the important thing, the bear case which I want to make is that the UPI market share cap has been postponed by 2 years. Now interestingly, they are having less number of market share when it comes in the UPI segment, of course the larger players being PhonePe and Google Pay. So there is a relaxation coming for their peers, and in return there has been a negative sentiment on a short-term basis. But Snehi, what are the important bull cases for Paytm?
Absolutely, the first one to counter exactly what you have said. Okay, agreed, there is a little bit of a postponement coming in, but you also have to remember that the regulator has now allowed UPI payments to and from prepaid instruments via third-party apps. So that is something that is positive, and they've also upped that ceiling to 10,000 rupees. That's also something important to note about, Sharad. This could be an incremental positive for Paytm going ahead as well.
Well, Snehi, there are recent news flows also coming in, and a spate of resignations are coming in. Recently, the Chief Compliance Officer also resigned. And of course, the company is going under restructuring. So we might see more senior management actually leaving the company as well.
Well, we can talk about restructuring, Sharad. A couple of positives also to focus on. The company is now focusing only on its core business, and that can be very visible seeing the recent activities that they have undertaken when it comes to the structure of the company. Remember, Paytm has recently sold its ticketing business to Zomato. They have also sold stake in PayPay Corp. They've sold a stake of their business in PayPay Corp to Japan as well. So that is also something that is important to focus on, and it also shows that the management is confident of the core business, and that's also looking good for Paytm.
But Snehi, there is always a question of the macro environment, and right now for the macro environment, be it the banks, be it the financial institutions, and even fintechs itself, there is an uncertainty coming in, and especially in the unsecured lending portion. And also RBI has been whipping the crack when it comes to the fintech as well. So of course the macro uncertainty is something which I would be very cautious for.
Absolutely, but also on the flip side, now can't help but notice the positive here. The company has once again reapplied for the payment aggregator license from the RBI. So this means this is also a positive development coming in for Paytm. Plus NPCI, which is the National Payments Corporation of India, has approved, they've allowed Paytm to onboard new UPI payment customers as well, and new users, fresh users. So that is also incrementally positive for Paytm.
But let's look at brokerages and analysts. That is something which we always look at.
Absolutely.
Interestingly, Bernstein, they have given an important statement that there might be pressure coming when it comes to the payments margin, and the subdued dispersal growth might be there. Also, they have a bear case scenario where there is almost a 40% downside from the target price of 1,000 rupees as well.
Well, absolutely. But on the flip side, on the positive side, we also have a UBS note coming in that says, and they highlight that Paytm could be adjusted EBITDA break-even. They could reach this break-even as early as Q4 of FY25. And Sharad, first day of that quarter today, so looking good for Paytm.
Yes, first day it is looking good, but today's price has actually fallen down.
That's true.
For the investors, 1 year itself, the number, look at the screen, 52% up in the last 1 year itself. And if you look at the Bloomberg target price, that is almost 742 rupees. Current market prices, it is still down when it comes to a 25% downside in the potential, because the stock has run up. So what's left now?
Sharad, you have to take the glass half full approach over here. If the stock is up 52% in the last 1 year, you also have to realize that the stock is still 54% lower from its IPO price. And if investors had confidence in the IPO back then, and if the stock is still lower 54% from that IPO price, there's enough runway for growth amid fintech listings in 2025. It's going to be an exciting space to watch out for.
Well, yes, there is a confusion whether it's a bull case scenario for Paytm or it's a bear case scenario, and we'll leave it for our viewers to decide that.